Savannah, thanks for being on the show.
Of course. Looking forward to chatting with you.
Yeah, absolutely. So you're uniquely qualified to talk about this because of your designations. Why don't you just talk a little bit about that and explain it?
Yeah. So I first off am a certified financial planner professional, so which means I've gone through, the extensive education, experience, and ethics requirements put forth by the CFP board. It also means I'm held to a fiduciary standard, which I think Laura has talked about with you before, essentially meaning that we always act in our client's best interest. So we're not earning commissions on anything we're recommending. We're purely finding what's best for our clients. So that's kind of my planning hat. I'm a lead planner over with Morris Financial Concepts. My other designation is an enrolled agent, or an EA, which essentially means I've taken 3 exams, about 4 hours each, with the IRS, purely taxes.
Wow.
So as you imagine, it was a really exciting time in my
I
life.
imagine.
Um, Studying taxes, taking these exams,
Hmm.
but it means I also prepare taxes during tax season. So I have kind of both hats where I wear that tax side and also that planning side. I think it's kind of unique in the tax world because a lot of tax preparation is very backwards looking, right?
Yeah.
So we're preparing the tax for the prior year, and kind of what's done has been done, and we just worry about the consequences.
Mm.
But because of our planning expertise, we're a lot more intentional about helping clients plan ahead so that we're never having to send that email on April 15th that is, hey, you owe, X amount,
Yeah.
that the client was not prepared for. So we really place an emphasis on planning, before the actual preparation.
Especially if you're self-employed, speaking from experience, that's not a fun day.
Hmm.
You're like, oh, okay. Let me make that
Yes,
happen
yeah,
today.
because
Great.
self-employed individuals, you have more flexibility, but
Hmm.
it's also more responsibility
Yeah, of
and
course.
a lot more to work through.
All right. All right, Savannah. So we're coming to the end of the year, going into a new year. What are some things a self-employed individual should be doing to prepare for tax season?
Yeah. So one of the things, first off the bat to do when you're getting to the end of the year, something we're doing with our clients in this month of December, is reviewing the estimated taxes that were
Mm.
made throughout the year of 2023. So generally, those are prepared in April or whenever your prior year tax return was prepared, um, and uses assumptions for what your income will be for the remainder of 2023, and then lays out kind of those quarterly estimated payments to make. Um, as we know, sometimes income changes, especially, if it's your first year as a self-employed individual. You may not
That's what I was
know
thinking.
what's,
How do you know what the income is
yeah,
assumed to be?
yeah. So, if you prepared your own taxes, a lot of the software just assumes that your income is going to be, the same as the past year. Um, But again, that could be very different if
Mm,
2022 was your first year, or, if you only worked for a month self-employed in 2022, 2023 may look a lot different. And so
absolutely.
that's one of the reasons we really want to look at, hey, what was assumed back in April, and are we still on track, or do we need to, adjust that final quarterly payment?
So what other changes might impact the estimated taxes needed?
Yeah, so in addition to, right, your self-employed
Mm,
income and expenses, so if, this was a off the charts year for you in terms of income, or
yeah.
if on the other end, you had some unexpected big expenses, that may be another reason to reassess those estimated payments. Some other things we see is, in the first year, maybe you worked as an employee, so you received a W-2 in 2022 for the first half of the year, and then you said, "Hey, I'm gonna go try my own business."
Hmm.
You'd have half a year of W-2 income. So in looking at 2023, we'd say, "Hey, should we still assume the total annual income is the same, or should we
Yes.
adjust that?" So that's one way that the W-2 income may impact it. The other side of that is that W-2 wages have tax withholding associated. Um, Whereas your self-employed income as you know, does not have any tax withholding.
Yep. Yep.
So oftentimes, if you look at 2022, clients, had paid in about $2,000, say, from the W-2 wages. That wasn't being paid in for 2023. So you want to make sure that your estimated taxes are covering that gap.
Oh, that makes a lot of sense, of course. I've been in a situation where I had an S corp getting W-2 wages and another
Hmm.
LLC with not at the same
Yeah,
time.
yeah,
And
from the
I
same.
assume that happens,
Yeah,
That's why we have
yeah,
you guys, because that gets really complicated.
it does. Yeah, and oftentimes, employee deductions you're wondering about,
Yeah.
or versus self-employed deductions.
Hmm.
Um, yeah.
All right. So what happens if my income has come in much higher than I originally projected back in April 2022?
So that's one of the things we see with these year-end reviews is if
Mm.
we're like, hey, your income, really rocketed or, shot up from
Yeah.
2022.
Good
We
problem to
look at
have.
it. Yeah, it is. um, but we look at it now because that fourth quarter estimated payment is due in January 15th,
Mm.
or on January 15th.
Yes.
Um,
Yes.
so you can adjust that last payment to hopefully help mitigate or even eliminate any penalties for not, paying the right amount earlier throughout the year.
Oh, so you still have time to avoid the penalties if you kind of make it
Hmm.
right at the end. Well, that's good.
Yeah.
So what if I forgot and I didn't make any estimated payments?
Well, first of all, we always say don't panic. It's something that we hear often, especially again for those in their first year of self-employed work.
Hmm.
What? You mean I have to pay taxes throughout the year? Um, so if it is your first year, there are ways to request waiver of any penalties that you may incur at tax time. There is something called the safe harbor rule, which is essentially you want to pay in at least 110% of your prior year's tax liability. Um,
Yeah.
so the people may have heard the safe harbor. It's generally either 100% or 110% of last year's
Okay.
tax liability. Now, the 100 or 110 depends on your income level. So for conservative purposes, I'll just use 110% just to make sure we're overshooting it.
Hmm.
Um, but you'll notice I'm really specific in saying tax liability,
Yes.
because it's a common misconception, I think, that some people, may look at their tax return and say, hey, I got a refund. I didn't owe any taxes, so I don't have to, pay estimates. And that's not necessarily your tax liability.
Hmm.
Um, so what we try and have clients do is look at, or what we're looking at when we look at your 2022 return, is the actual tax liability. So once we get all your income in and we calculate your taxes, we
Hmm.
calculate your self-employment taxes, we get to a line that says your total tax.
Yeah.
And that's the number you want to look at in looking at what that safe harbor may be for the current year.
Got it. Oh, that's good to know. Interesting.
Yeah.
So if I forgot to make payments throughout the year, would a fourth quarter payment catch me up? How would that work?
Yeah. So, yes, with a little caveat there,
Mm.
because the IRS can still ding you some penalties for not paying in equal installments throughout the year.
Yeah.
So there are ways to mitigate that. One of which is, if you sold something at a gain in the fourth quarter of the year, right? You're able to say, "Hey, I didn't know I was going to sell this. This income came in at the end of the year." And your tax preparer can go through a method that shows that you paid in the appropriate taxes for the income you earned in each quarter.
Oh, like you
Um,
got a big job at the end of the year and it just okay.
exactly.
That makes
Yeah,
sense.
because you wouldn't have known, right, in
Hmm.
June to make a higher estimated payment because of this income that was going to come in at the end of the year.
Sure.
Um, so that's one way to do it. Um, Another strategy is using withholding to avoid this type of penalty. So you had mentioned, you had an S corp W-2 at one point plus your
Yeah.
self-employed income. The nice part about withholding on wages, so if it's a W-2 or even on a 1099-R. So that would be if you're also receiving a pension or if you took a distribution from a retirement account.
Hmm.
Um, you can have withholding on either of those forms, and the IRS actually treats withholding as being paid equally throughout the year. So even if, you adjust your 1231 pay stub to have, 100% taxes withheld, the IRS will still assume or look at that and say, oh, they paid it equally throughout the year, no penalties, all is well. Um,
Interesting.
so it is a strategy there, a little bit of a unique strategy in
For
saying,
sure.
I didn't make any payments. I'm going to get a penalty for not paying equally throughout the year.
Yeah.
If you have that option of W-2 wages, or even, a required distribution from an IRA account, you can look into taking all the taxes out of that, and avoiding those penalties. Um, I would just add, if you're specifically taking a distribution from a retirement account, I definitely recommend consulting a tax preparer because that income will also add to your taxable income. And if it's not planned for, you may need to redo your estimates anyways.
Yeah, that makes sense. I bet a lot of people are in that situation. It kind of makes me think of the 401k IRA conversation we've had in the past, and you're
Yeah,
starting to take those distributions.
distributions. Yeah, it
Hmm.
can get a little complex and you're starting to deal with tax consequences. So it's helpful kind of piecing all of those things together.
So, what else should someone do at the end of the year as a self-employed individual to prepare for income and expenses?
Yeah, so the estimated taxes are a big piece. Usually falls on the tax preparer to really get into the analysis.
Hmm.
The other data gathering and other fun part of tax season is on the self-employed individual in terms of record keeping, in terms of gathering up income and expenses and figuring out um, all of the things that needs to go on your tax return or needs to go to your tax preparer. So one thing we always recommend when somebody comes to us ready to start their own business is to open up a separate bank account for your business income and expenses. So this may not help you for the previous
Yeah.
year, but it would definitely make your life easier going forward, in making sure you're able to track, all of your income and expenses in one account. So when you get to the year end, you just look at that year end statement, export the transactions, and then you're able to go in and categorize, what each item of income is, each item of expense is.
Hmm.
Um, we never are happy when a client gives us just a bunch of transactions and statements and it's, part of their personal tax return or personal checking account that we're trying to pick out.
Oh gosh,
Um,
yeah.
yeah.
I remember that in the early days for sure.
Yeah,
It
yeah, because
still
it's
was years before I
overwhelming.
took even like my cell phone and moved it. That was, it was silly. I kept
Yeah,
forgetting to do it.
yeah. So it's overwhelming for, both the self-employed individual and the tax preparer,
Hmm.
trying to sort through those things. So that's one of the first things we say is, separate these accounts, make sure you have your business income on one account, business expenses from that same account,
Yeah.
to kind of help you prepare better for tax season.
Oh gosh, I kind of assumed everyone did that, but I'm glad you're saying it for people who aren't.
Yeah,
It's really important,
yeah. I
right?
think it's, if it's like a little side job or something, you're just, hey, I'm gonna start taking photos or
I
something.
could see that. Yeah, and it turns
You're
into
like,
something real. That's not
mm-hmm.
necessarily like a hobby, basically. It turns into a
Yeah,
business.
exactly.
What is that? What is that amount? When is it hobby a business? Is there a specific uh income
It's
level?
Gosh, I don't think there's a specific income level.
Yeah,
The IRS looks at like if you're engaging in this activity for profit. And
sure.
they
Okay.
generally look for, I think it's 3 out of the last 5 years that you've made a profit. Um,
Hmm.
so, there's a lot of people that, write columns or, are writing a book and don't make a profit for a couple of years.
Sure.
And we have to kind of consider, is this becoming a hobby? Or is it still a business? Are you still pursuing a profit? Um,
Gotcha.
so there's not necessarily an income level, but certainly if you're earning income, it should be a discussion of
So it's like
whether
your
it's
intention and are you earning income?
exactly. Yeah,
All
it's
right.
the
That makes sense.
classic IRS. vagueness of you figure it out and then
Yeah.
we'll
Oh, is
let you
that
know
a
what we
normal
think.
bit thing? I've heard that, but I guess that's a great example. All
They're-
right.
on some things they're pretty specific, but most things it's quite vague.
Yeah, interesting. So what about expenses related to your car or your home office? How do you handle that?
Yeah, those are big expenses for self-employed individuals, and
Mhm.
oftentimes one that they're like, wait, I work for myself now. I need to deduct, the cost of my car and my home office and all of these
Yeah.
things. It's one of those things too that still requires a lot of legwork on the taxpayer's end to make sure you're, dotting all your I's, crossing your T's, and getting that deduction. So especially for a vehicle, if you're using a car in your business, traveling to meet with clients, to pick up supplies. One thing we recommend doing is taking a picture of your odometer on January 1st, and then
Mm,
again on December 31st, because your
yes.
tax preparer will want your total mileage, and we'll have to allocate it between business mileage and personal mileage. Um, so another thing that we often encourage clients to do is to keep a notebook, or even in this day and age on your phone, the Notes app, um, in the car. So notebook in the car, phone's always
Yes.
with you. But as soon as you get in the car to go off on your business adventure, to write down the date, write down the business purpose, and write down the mileage. Um, this is going to help you and save you a lot of time at the end of the year. We have
Yeah.
clients trying to piece together, okay, I went here for business and what did
Yeah,
I
that's what
do
I'm like
there?
looking at my Google Calendar, like, because it's
Yeah,
all in there, but it's not fun.
yeah,
Like,
yeah. So
yeah,
having that
okay.
notebook that's kind of like a running log will
Yes.
really help you because that's also the record keeping requirement. That's what the IRS will want to see if it's ever audited. They'll say, hey, do you have the records to back this up, this
That
deduction
makes
up?
sense. Okay.
Yeah. So that's the vehicle. Now the home office, similarly, there's some legwork there. Now, generally, you take a measurement of your office. So we would
Yep.
need the square footage relative to the total square footage in your home. And then that's how we go ahead and allocate the home expenses. So anything like your rent payments or mortgage interest, utilities, so internet, electricity, your homeowner's insurance, property taxes, even maintenance and repairs in the office area um, can go towards that home office deduction.
Oh, that's
Um,
interesting. The maintenance or
yeah.
repairs.
hmm Now it's all within reason, right? Of
Yeah.
renovating the bathroom may not
Yeah. Well,
entirely qualify, but
my heat literally just went out last week. Would that count like a
ah,
percentage of it? Because it's heating
hmm
the square footage.
yeah.
That's
Yeah, if it's part
interesting.
of your office area, yeah. And we've had like landscaping even, so if it's like if clients are
Oh, if like
meeting at
curb
your
appeal is
your
part
home
of what's
office,
bringing people
yeah.
in. That makes
Mhm.
sense.
Yeah.
Okay.
So, a lot of things like that. The one key nuance in home office is, of course, the IRS says it must be used regularly and exclusively for your business purposes. So, I mentioned the exclusively one. I am a remote employee, so I don't get deductions, but my home office also serves as, right now it's holding Christmas presents. And,
Sure.
last year my mother in law stayed in here. We threw a mattress up here, and that wouldn't qualify. So you want to be careful in terms of how you're using your home
Yeah, it has
office.
to be exclusive. So
Hmm Yeah.
I'm building a home office, like an offsite building. How does that
hmm
work? Do you like
Yeah.
roll it
So
all
that
up
would
into?
be, yeah, if it's exclusively for your business, it'd
Yeah.
be 100% deductible.
Oh,
So
all the
there's also,
expenses of creating it and everything?
mhm,
Oh,
yeah.
that's good. I'm glad I asked.
Um, yeah. Well, and so same thing with the home office where if, you keep a landline in, I don't know if people have those still, but if you keep a landline in, your home office
Yeah.
and it's specifically for your business, that would
Yep.
be 100% deductible.
Great.
Or, in your separate office area, if you pay for internet just for your office, again, 100% deductible. Um,
Gotcha.
so it
Okay.
gets a little bit tricky kind of walking through those black and white and gray areas of, is this
Mm-hmm.
100%? Do I need to allocate this? So a
Mm, that's
lot of times those are the expenses that come to the tax preparer of, hey, I just spent, so much money on this. Can it be a business deduction? And we kind of have to go through the purpose, the use,
yes,
and then determine
of
how
course.
that fits into your tax return.
So what are other deductions that are available for self-employed people that often get missed?
Yeah, great question. So the expenses are often not easily thought of, but often thought of, hey, my home office and this car, what can I take these as deductions? One
Yeah.
of the things that often gets missed is health insurance. So especially if you're a self-employed individual and you're paying for your own health insurance on the marketplace,
Yeah.
that can be a significant expenditure. And it does qualify as a self-employed deduction against your
Hmm.
taxable income. So that's a big one. Sometimes even your spouse's health insurance would
I was
be
just going to
included
ask,
there.
how about, I have a wife and two kids. What does that work if you're that's one
Yeah,
lump
so
sum?
oftentimes if it's a family policy,
Yeah.
that would count. And we've seen it where the spouse's health insurance is included on there as well. Um,
Interesting. Yeah.
Yeah, so that and then the other one is long-term care insurance. So that actually falls under the same category, and
Does it
is
really?
often missed.
I've
Yeah,
never heard that before because
mhm,
it's quite expensive, but it's great to start it early.
it is. Yeah, yeah, if you start it, before or around 50, 55, I think they say is kind of that, sweet spot to start
Is
looking
it? I
for
didn't.
it.
I thought it was a little bit
Um,
younger, but that makes sense.
Yeah, I
Like
think all
about
insurance
20
agents
years to
kind of
pay
tell
it.
you, earlier the better, right? Because it's going to be cheaper.
Yeah.
Um, but sometimes it's hard to know at 40 if you want to purchase long-term care or what that looks like in,
Yeah.
40, 50 years. Um, but yeah, so that's one of the things that falls under that same deduction that
Yeah.
people often don't think about. So it's making sure those premiums are included in your documents that you provide to your preparer, or if you're preparing your own return, make sure you look into that line item that allows for that deduction.
Okay.
Um, yeah, so in terms of, well, not a deduction, there are many retirement plan options available for
Hmm.
self-employed individuals that can really provide some significant tax savings. And they can also be made up until the filing deadline of the tax return.
Oh,
So that's
that's
one of those
interesting.
things. Yeah, so it's one of those things you don't have to make the
Wait, so I could
deduction.
get it right now and make a big payment, you're saying? Is that what you're saying?
Yeah, yeah. So you
Okay.
could make it, April
Right now,
15th.
meaning we're doing this interview at the beginning of December
Yes.
2023.
Yes.
So that's why okay, yeah, that's interesting. I'd never heard anyone
Yeah.
say
And so even, there's also a strategy that you can, if you file an extension. So say we get to April, we're preparing your tax return and we say, hey, there's some big tax savings if you set up a SEP IRA, a self-employed pension plan. We can, but you say, hey, I don't have the funds for that right now. I wasn't really prepared for that.
yeah.
I have some big income coming in the next couple of months though, and may be able to do it. We could file an extension. So we say, okay, we're going to file the extension assuming that you make, X amount of contributions by
Sure.
October. You still, extensions don't mean you don't have to pay the tax owed. So if there is any tax owed, we'd want you to make that payment in April, but
Yes.
you'd have until October to make that contribution. And then come October, we'd
Oh,
say, did you make that retirement contribution? Yes. We'll finalize the return and file it for you. Um, so it is a way when clients haven't planned ahead, they didn't know what they were going to make because the self-employed retirement plans, the contributions are also calculated based on your income for the year.
sure.
So like we talked about before, that your income sometimes is unpredictable. You can't really predict what you're going to make for the whole year, for the next
Mm-hmm.
month. So oftentimes when we prepare the tax return, we're telling clients, hey, here's the maximum amount you can put into the retirement account. Here's what the tax savings would be if you did that. Um, do you want to move forward with that or do you need more time? And so that's a good strategy for self-employed individuals looking to, it is more cash outflow, so it's still having to pay something,
Yes.
but you're paying it to future you instead of to the IRS.
Are there any other tax strategies that self-employed individuals should consider?
In terms of tax strategies, one of the big ones that I think you hear often is the S corp election.
Hmm.
So we have a lot of people coming to us saying, I'm self-employed. Should I be an S corp? And is it going to save me all this money? And it's a big topic in and of itself. A lot of analysis required, and we may have a future discussion surrounding, just the ins and outs of that election.
That's a great
Um,
idea. Yeah.
yeah, but as a brief summary, kind of electing the S corp status allows you to eliminate some of the self-employment taxes that you're owed as a schedule, or that you are liable for as a Schedule C individual.
Yeah.
So the Schedule C, self-employed, it's also called a disregarded entity. It's reported on your own tax return under your social. And then that income number is subject to payroll taxes, so FICA and the Medicare taxes, and you're
Yes.
liable for the employee and the employer portion because you are both. Now, with an S corp, the business income and expenses are taxed on a separate tax return. So it's called an 1120F under the S corp EIN. And then you would issue yourself a W-2 in the amount of reasonable wages. And then the rest of the income would flow through to you, subject to those same, or not subject to those self-employment taxes. So,
Oh, not subject to, right? It's like
mhm.
they're called distributions. Is that correct?
Yeah, yeah. So they don't flow through as self-employed income, um, but the payroll taxes are captured on that W-2. So it's a way to kind of separate out that income, and save on taxes. Now,
Hmm.
that reasonable wage is really how the IRS defines it. We're never given a good number or percentage even.
Yes.
So it does require some planning and consulting to determine how much do we need to pay out in wages, and then how much can we flow through as, like you said, a distribution.
Hmm.
um, so there are some good tax savings oftentimes. It also comes with some additional costs and legwork, where you have to now keep payroll, you have to generate W-2s,
Hmm.
you're required to do some other reporting requirements throughout the year. So it's not the best option for everyone. It's definitely looking at kind of, do those savings outweigh the costs and the legwork and the time.
Yes, that
Um,
makes a lot of sense.
yeah, so it's something we definitely look at with self-employed individuals, but it's not, the slam dunk strategy that it's often made out to be.
Ah, that makes sense. There's always
Yeah.
a two ways. There's always two
Yes,
sides of
right?
every story. Yeah, I think an episode just on that would be really great. I know just as a
Yeah.
self-employed individual, I would like to know more about it, and I think the audience
Mhm.
would as well.
Yeah, and there's a lot of nuances, a lot of ins and outs that can make it worthwhile, but is also, worth educating on.
Absolutely. All right, Savannah, is there anything else you want to share?
No, I think that was it. We covered a lot of good things.
Absolutely. Thanks so much for being on the show, and I'm looking forward to talking to you again.
Yeah, thank you so much.